live. What's this? Turn camera on, mute microphone. Yes, okay now, good. Okay, hi guys, thank you all very much. Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Thank you all very much for tuning in to my midweek analysis with FX Street. Thank you, administrator. Thank you all for your time. I hope you've all had a wonderful week so far. My name is Zaheer Anwari. I'm a long-term trend trader. I've been trading since 2007, and I'm a full-time trader and mentor. Now, just to give you a brief background about myself, as a trend trader, I don't day trade. I don't look for intraday opportunities. I don't scalp. I'm basically looking for long-term trends in the market. So I'm only looking to take a few trades a year potentially and just hold these positions for as long as trends remain in play. And as the trends develop, I'll then strategically compound into that particular trend or trade that I'm taking. Okay, if you want to know more about trend trading and if you actually want to get involved in trend trading, then please go to the following link, which is trendtrader.pro/apps, standing for apprentice. And this will take you to a page which will then direct you to live training, which is taking place this Saturday. So if you are available from 4 p.m. to 10 p.m. UK time, I am doing online training, and this is effectively for a whole month. It's live training on Saturday, but you get a whole month of community support. So there's community, there's a strategy and risk management, teach you how to trade and keep your screen time down to 30 minutes a day. Remember, as a long-term trend trader, you don't want to be glued to the screen. As a trader in general, you don't want to be glued to the screen. You want to be able to get your money to work for you. You don't want to be working for your money, especially if you already have a 9 to 5. You want a style of trading that can be adapted around that. Okay, and then all the other bits and pieces that go with it: video portal, community support, weekly webinars. Guys, there's a lot that goes into this. Okay, starting on Saturday, and it's £99 for the month if you're outside the EU, and £99 plus VAT if you are. If you're inside the EU, £99 plus VAT. If you're outside, then it's just £99. So please check this out. Okay, if you have any questions, guys, by all means, please ask me at the end of the presentation. Okay, I'm now going to go to my e-signal. Bear with me 1 second. It can't seem to there we go. All right, let's share that. Okay, can I get a quick hands up, administrator? Can you see my screen? Yeah, fantastic. Okay, thank you, Adinda. Right, so let's do some analysis. Let's have a look at what's going on in the markets. What you can see in front of you is a typical chart setup of mine. So if you look at the left-hand side, you have the watch list, and it's a very extensive watch list. Aussie dollar, US dollar at the top, going all the way down to the South African rand, Japanese yen at the bottom. So it's an extensive watch list. The reason for that is that currencies move in groups. If you guys are only focusing on one or two currencies, for example, the euro dollar or the pound dollar, or if you're just looking at, for example, gold or just a single instrument, what you guys need to know is that, or what you must be aware of, is the fact that currencies aren't always liquid 365 days of the year. There's times when certain currencies are liquid, there's times when they're not. And as a trader, it's about making money. And what you want to do is go to where the money is. So if the money is on for example, the pound Canadian dollar, you want to be trading the pound Canadian dollar, not the euro dollar. If the money leaves the pound Canadian dollar and goes to a stock, you want to go to that stock. A trend trader follows the money. In fact, traders should follow the money. You want to be where the market makers are. The market makers are in a particular environment, if they're on a particular currency, that's where you want to be, because ultimately the market makers will be doing all the work. All you need to do is jump on their back and piggyback the ride. It's a much easier process rather than trying to get in and out of trades on a daily basis. Now let's have a look at the euro dollar. Let's start with this. And if you look on the monthly chart, I have my levels of support and resistance drawn by the green and the red tool. And I have the pink lines which establish the high and the low and the close of 2015, so the previous calendar year. These annual levels, these pink lines, they're very important, because if price is trading between these pink lines, it's a consolidation. If price is trading above the pink lines, it's a bull market. And if price is trading below the pink lines, it's a bear market. So by instantly seeing where price is in relation to these pink lines, we can tell what kind of market we're in. Now, if I open up the monthly chart, you can see quite clearly that here was a bear trend, and now price is in consolidation. The euro dollar is not something that you want to be trading. You don't want to be trading consolidations. Traders need to get away from the idea of thinking that consolidations are profitable environments. You can make money, but you can't make good growth. There's a difference between the two. You can make money on any time frame, but to make consistent, large, compounded growth, it's not going to happen trading ranges, because you're in and out of trades very quickly. What you want to be able to do is get into a trend and hold it throughout that whole period. And then as the trend develops, repeatedly compound, add new positions. So here is a trend, here is a consolidation. We can see it's in the pink lines, confirmation. Now, if we go to the weekly and the daily time frame, I've got two moving averages on there. I've got the black, which is the 200 moving average on both the weekly and the daily, and I've got the blue, which are the 50 moving averages. So in a strong bear market, I want to be below the 200 and the 50 on the weekly, and below the 200 and the 50 on the daily. So you can see right here that we were below both moving averages on the weekly and below both moving averages on the daily. That is a strong bear market. In a strong bull market, we want to be above both sets of moving averages on both time frames. It's a very simple process. This isn't logic that I've created. This isn't logic that suddenly I just miraculously came up with. This is logic that's been in play for decades. These are old school techniques. Just because we have software doesn't mean that we need to lose the essence of the way the markets move. The markets move in a particular fashion. There's a rhythm to it. The wheel's been in motion for decades. Unfortunately, what's happened is that with the creation of the internet has really sort of taken traders down a different route. And that is really a route of shorter time frame trading. Now, shorter time frame trading can make you money. I've already said it can make you money. But if you have the size, if you have the reserves of a bank, billions of dollars, that is where shorter time frame trading really is effective. If you're coming in with a smaller account and a much, much smaller account, I'm talking about several thousand, shorter time frame trading is not going to give you the growth that you're looking for. In addition, it's not going to give you the lifestyle. If you're glued to your computer all day or your mobile phone app, stressed out, not quite sure what's happening, 1 minute you're in profit, next minute you're in loss, again, it's not giving you the lifestyle that you're looking for. Trading's not about that. So looking at the weekly and the daily time frame, what is price currently doing? Well, we can see it's still below the 200, but price is now above the 50. And if you actually look at the 50 moving average, if I just open it up, look how flat that 50 moving average has become. In fact, it's more hooking up than hooking down. But in reality, it's just very flat. What we want is the moving averages to be confirming a trend. And we know they're confirming a trend when the moving averages are sloping down in a bear market or sloping up in a bull market. As soon as the moving averages start flattening out, then we're in a consolidation. And we can see that anyway, just looking at price. So you can see by putting three useful bits of information together, support and resistance are your leading indicators. So if price breaks a support level, we know where the next support level is. Price action is our primary indicator. So we can see straight away, just by looking at this, whether it's in a trend or a consolidation. We can see it's in a consolidation. We can then use moving averages to confirm that. And we can see that the 50 moving average is flattening out on the weekly time frame, telling us that we're very much in an area of consolidation. On the daily time frame, we've got exactly the same setup. Here is the trend, which was a very profitable trend. This is when price fell from 1.4 all the way down to around 1.1. So that's a fall of around 3,000 pips. After every move, price consolidates. Look at the 50 moving average. Look how flat it became. And look how the 200 moving average is now flattening out as well. And at this point right now, both the 200 and the 50 are very flat. If you look at price action itself, it's very much stuck in an area of consolidation. Now, this is the thing about trading consolidations. Look how many resistance and support levels you got. You got resistance, 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 resistance here, support, support, support. So you can see that price is not clear cut in terms of just going up, down, up, down, up, down, up, down. You've got multiple levels in between that price has to contend with. And this is why it's very difficult to trade ranges, because you don't know where price is going to go. What we need to do is simply stand aside and wait for a breakout. So here is the high of the range, and here is the low of the range. We need to see price either break out to the upside and establish a bull trend, or break out to the downside to establish a bear trend. And that is really our preference. We would like to see price break out to the downside because it's already trended previously to the downside. Until it does that, you want to be standing aside. And look at what price is currently doing. It's just finding support at the 200 moving average. This is not a currency that you want to be trading, yet we always see people repeatedly trading the euro dollar, looking for small moves. Okay, let's move on. Let's have a look at the US dollar Canadian dollar, see what that's been doing. So US dollar Canadian dollar, that was in a long-term bullish trend. It still is very much, price still has a bullish bias. I know it's pulling back, but it's pulled back here, it pulled back here. So this pullback at the moment is nothing, nothing to suggest a reversal. What we really need to see is price dictate a trend direction. So if it clears 1.3, then we may see weakness to the downside. If it clears the high and 1.5, then we could see strength to the upside. Either way, until it breaks out to either to the upside or the downside, we don't really want to be trading this. If you look on the weekly, it's finding support at the 50 moving average. And you can see there's a bounce to the upside. So if the 50 moving average holds strong, then we could see strength back up to the upside. If you look on the daily, price is around the daily 200 moving average. It's now back above it. It's currently trading above it. So we do have a bullish bias, but it's trading below the 50. We need to see strength to the upside. We need to see these moving averages start hooking up to confirm we're in a bull trend. For now, it's really in no man's land. It's not a very appealing looking chart. Okay, let's have a look at the Cad Japanese Yen. Okay, Cad Japanese Yen, since this high point here, we've seen weakness to the downside. Price found support at 80, and you can see that it tried to break through in January, failed, February, failed, and now March, it's remained above there. And you can see how the pink lines are now holding as a support level. If I just open this up, you can see how the pink line is holding as a support level. So what we need to see is price clear this level. As the trend is bearish, we'd like to see weakness to the downside and then a continuation of the bear trend. And we could then see price move towards 70, which is the next round number. And you can see there's a level here and there's a level here. These are around 70. 70 round numbers aren't hard levels. Trading is an art. It's not a science. You can't expect price to just always bang onto a certain level. It's going to come to around that level. So 70 is a round number. Price has come to around that level. If it clears this level, then we could see price move towards 60. And that was a support level back in 1995. So we could potentially see these levels retested and remet. If we look at the weekly, trading below the 200, trading below the 50. However, on the daily, we are below the 200, but price is now back above the 50. But look at where it's come to. It's simply come to a previous level of support. We need to see this level hold strong. We are seeing weakness, but we want to see this level cleared. Once this level's cleared, that's when we can look for shorting opportunities. Already looked at the euro dollar, not looking very attractive. Let's look at the Aussie dollar US dollar. I missed that one out. So the Aussie dollar US dollar, since 2011, it's been in a bearish trend. And in the past, we can see how it's reacted to round numbers. There's a round number, 0.9, and you can see how that held as a support level. 0.8, we can see how it reacted as a resistance level. And 0.7, which is now a support level. The point is that price reacts to round numbers in one shape or form. But long term, the trend is bearish. Are we seeing a trend reversal to the upside? It's a little bit too early to guess, given that the long-term trend is bearish. So remember, you don't want to guess. You want to let price dictate. At the moment, it is suggesting strength to the upside. However, if we look at the weekly, trading above the 50, but below the 200. So it's stuck in that area. On the daily, it's above the 200 and it's above the 50. Ideally, we want to see the 50 hook up above the 200. So we want to see this crossover. And of course, we want to see the same thing on the weekly time frame as well. But the weekly time frame is a much slower moving time frame. Now, in an ideal scenario, we want to be trading above the 200 moving average on the weekly. But if you look at the distance, you're looking at 1,000, almost 1,500 pips. So if price does set up on the daily time frame according to your trading plan, you could actually take long positions, but just be aware of all the levels of resistance ahead. You've got multiple pivot resistance based on this consolidation. You've got several resistance levels. If it clears through this high, then it's clear that this whole resistance is clear through 0.8, and then we could see price climb to the upside. Okay, sometimes we have to really apply patience. You know, don't get roped into thinking that you need to be trading every day to make money. I hope you guys, there's no questions coming through as yet. I hope there are people out there listening, and if you do have any questions, please guys say hello to me in the chat box, and just to let me know that there are people out there. Okay, let's go to the euro pound. Start with the monthly time frame. Look, quite clearly the trend is bullish. If I open up the chart, you can see that price is stuck between that level of resistance, which is the high of 2015, and that level there, which is acting as support. Okay, so we can see that price is stuck between resistance and support. Trend is bullish, so we favor a continuation of the trend. If price clears 0.80, that is potentially when we can start looking for long setups. Okay, on the weekly time frame, it's been struggling to break through the weekly 200. If it clears the weekly 200 and 0.80, then we could see further strength to the upside. The 50 starting to hook up. That's looking interesting on the weekly. You can see the 50 starting to hook up. On the daily time frame, price is trading above the 50 and above the 200, so that's looking good. In addition, the 50 is really, look at the angle of the 50. It is hooking up. Despite these pullbacks, the 50 is still hooking up. We've seen strength up yesterday. We have seen a little bit of strength today. But what we now need to see is this high point cleared and 0.80 cleared. When these two levels are clear, this is when we can start looking to trade this. It will also clear the weekly 200 at that level as well. Okay, let's have a look at the pound dollar. So if you look at the monthly time frame, you can see that the trend has been bearish since 2014. Price found resistance around 1.70, the round number. We had this nice trend to the downside. This is when I last traded it. Since then, I've not been trading this. We had a bounce to the upside towards 1.6, another leg down, broke through this whole support level quite comfortably, came towards 1.4, now seeing a bounce to the upside. So you can see how price is reacting to round numbers. In addition, we've got this level acting as resistance, which is why price tried to break through, was pushed back down. This level acting as resistance, and we've got this level acting as support, and we've got this level acting as support. So we've got two support levels versus this resistance. But we've got the trend, which is bearish. And remember, support levels will get broken in a trend. But we need to see price dictate that. We don't want to predict it, because price, of course, could just bounce to the upside. So we do want to wait for this. The earliest I would look to trade this is when price clears this level here. When price clears this level here, then we've got a clear run all the way down to the figure 1, which is 3,500 pips. Okay, weekly, trading below the 200, below the 50. So that's looking good. Daily, below the 200, below the 50. So that's looking good. If you look at the daily, look at the pullback. Came to around the 50 and then moved now back to the downside. Okay, so you can see how it respects the 50. There's a bounce off the 50, bounce off the 50, bounce off the 50, a little bit of bounce around here, another little bit of bounce, but then another bounce off the 50 here. So you can see how the 50 moving average does act as a level of support or resistance. And we can see that all the way through. Here's the other trend previous. This is the trend that I last traded this. Look how well it stayed below the 50. Okay, I know there's a little bit here, and that's fine. Remember, price does what it does. You can't always get it bang on. But the reason why it came to this level is because there's a strong support level here based on this consolidation. We had a bearish engulfing and then weakness to the downside. Okay, the point is that this is not a tradable opportunity right now. We are seeing weakness. We are seeing a bounce off a level of resistance, and we are now seeing weakness to the downside. If this continues, and if it clears 1.35, then this is when I'm looking to trade this. For now, I'm going to be standing aside. Okay, pound Japanese yen. Let's have a look at what's happening. Yesterday, we had some pretty good moves on the pound Japanese yen. So if I start with the monthly time frame, we can see we had weakness to the downside. Just open the chart up. So from around 2011 to 2015, that's a 4-year bullish trend. Price then did some sort of engulfing pattern, and we are now seeing weakness to the downside. And that's because 200 level acting as resistance. Price is now weakened, and it's now trading around the 160 round number level. And this was bound to happen, because if you look at what's happened prior, move to the downside, move to the downside, move to the downside. 3 months of a sustained move to the downside. A period like this is expected. We cannot expect price to continuously move in a straight line. If you look at this, we had a trend, several months in fact, and then a sideways move. Trend, sideways move, trends, another sort of flag formation, so on and so forth. So we are going to see that going forward. However, looking at the daily, looking at the weekly, look how price came back to look how price came back to the weekly 200. We're now seeing a bounce to the downside. Again, showing you how specific moving averages act as levels of support and resistance. In this case, resistance. So we've got resistance, we've got price back to that 160 round number. We want to see this level cleared, this pivot support cleared, and then potentially further weakness. And on the daily time frame, you can see again how prices come to close to that 50 moving average, bounce to the downside, potentially see further weakness. Okay, so that's the pound Japanese yen, and I think that is it. Let's just have a look at the pound Aussie dollar. Right, pound Aussie dollar. We are seeing weakness to the downside, several months of weakness now. So if we go back to November, December, January, February, March, price reached a high at around 2.2 round number. That's the high of 2015. Several months of indecision, and now the bears have taken control of the market. So we're really seeing price weaken. Got to be careful of the low here, because this will act as support. If this level is clear, then we could see potential weakness to the downside. Now, if you look on the weekly, however, price is trading below the 50, which is good, but it's above the 200, which is not ideal. So depending on your style of trading, you can look to take short positions if according to your setup, but be aware that you're trading against the 200 moving average, in which case you want to reduce your risk. If you look on the daily time frame, trading below the 50, and pricing now at around 1.90, round number. So if you guys are, still unfamiliar with what round numbers are levels that price likes to move towards. So if you look at that high point, the high point, as already mentioned, is 2.20. And then it came to 2.1, and there was a bounce to the upside. Weakness to the downside came towards 2. Another bounce to the upside. And now where is it? 1.9. Round number. Okay, so depending on how aggressive or conservative you want to be, if you're looking to short this, be aware of where the next support levels are. So you've got the low there of 2015, and you've got the weekly 200. If you're being conservative, wait for these levels to clear, and then we can look for shorting opportunities. Okay, guys, those are all the currencies that I wanted to look at. Are there any questions? Okay, there's no questions coming in. No questions coming in. Okay, there's a lot of talk prior to this. Has some kind of news item come out and everyone's gone to look at their news to see what's happening? There's a lot of talk prior to me coming on, but since I've come on, seems like everyone's disappeared. Which is a shame, but no problem at all. Okay, guys, I'm going to call time there. If you are out there and if there are people out there, let me just direct you to a few social media sites. Bear with me 1 second. Okay, yeah, Todd, I don't look at news. FOMC reports and I don't know, Draghi and all the other bits and pieces, Yellen, you know, whatever else people like to listen to. What people need to remember is that the institutions get the news before us. As private traders, we're outside the institutions. Institutions pay thousands of pounds a month to get news before us. Because they paid news before us, they get the news before us and they factor it into the markets. So whatever you're hearing right now on the FOMC reports, it's already been factored into the charts. By the time you hear it, the market makers have already traded on it. So there's no point looking at that kind of information in order to get an edge. Fundamentals are not going to give you an edge when it comes to trading currencies. They may give you a slight edge when it comes to looking at stocks, but that's a different approach. But in terms of a foreign exchange, there's absolutely no edge that it will give us as private traders, purely because by the time we hear it, that news is old. Do you think continued dollar strength? I don't think. You're very welcome, Todd. I don't think, Todd, I just let price dictate. And looking at what the markets are suggesting, everything is really range bound. You know, Aussie dollar, US dollar. The Aussie dollar is actually gaining strength against the US dollar. So going back to what we looked at, the Aussie dollar is going up, the US dollar is going down. So is the US dollar going to gain strength? I don't know. I couldn't tell you. I just let the markets dictate. Okay. Can you guys, administrator, can you see my screen? Can you see the chat box? Can I get a quick yes or no? Yeah, okay, fantastic. Okay, so guys, I've already directed you to the apprentice training. So if you guys are available this Saturday and you want live apprentice training, if you want to take your trading to another level, if you're tired of shorter time frame trading and you want something that's more consistent, you want something that's no stress, easily adaptable around what you do. If you want a more business-like approach, then this is where you want to be. Live training on Saturday. If you want an ebook to read just before you do the training, please go to this website. In fact, I'll put it in the chat box. I'll put all of these links in the chat box right now. If you want to download the ebook, please go to this website. This is the Almost Complete Guide to Trend Trading, written by Anne Chapman. This is a fantastic ebook, guys. If you've not read it, you must read it. If you are still wondering how technical analysis works, if you're still not sure about support and resistance, moving averages, how to use candlesticks, how to use chart patterns, how to avoid fake breakouts, all of that kind of information is all available in the Almost Complete Guide to Trend Trading. So please download it. It's an amazing book. If you want to attend the live training on Saturday, I'm just going to put all of these links in the chat box. Feel free to click on them. Now, if you're not aware, every Wednesday from 6 p.m. to 7 p.m. UK time, I do my own live webinar. I've put the link in there. I do my own live webinar. Please register for that. It was in an hour and a half's time. And I go through stocks and currencies and also commodities potentially. So we don't just look at foreign exchange. I look at foreign exchange, and Miguel, who's another member of the Dynamic Trader, he will look at stocks. Okay, so it's well worth coming to the webinar if you're interested in trading stocks. Please follow me on Twitter at Zaheer Anwari. Please follow Dynamic Trader at Dynamic Trader. Please follow us on Facebook and please like our page. Now, why do I say this? The reason why I say this is because last week, I don't know if you guys are familiar with this, but Facebook introduced Facebook Live. And Facebook Live is their version of, I've just put that in the chat box. Facebook Live is their version of Periscope. And so I'm using Periscope and I'm using Facebook Live, and the advantage to using Facebook Live is that they are all recorded and put onto Facebook Live. They go directly onto the page. Okay, so just before this webinar, I did a scope on why focus on breakouts and not pullbacks. Yesterday, I did a talk on why is the exit more important than the entry. And I also did what returns can you expect in your first year of trend trading. So you can see there's a lot of scopes on here. Okay, I'm doing at least 1 to 2 a day. So please like the Facebook page. And I think that is everything. Apprentice training, ebook, webinar. Follow me on Twitter, follow Dynamic Trader on Twitter, and follow and like our Facebook page to catch up with the Facebook Lives. Okay, guys, if there aren't any final questions, I am going to call time on the webinar. I'll just give you guys 1 minute. I'm going to just put myself on mute and get a drink. Okay, right. No questions. No one out there. Okay. Well, thank you very much, Todd, for your questions. I really appreciate that. Thank you for your time. I think there's people who can hear but can't interact with me. So thank you all very much for your time. I think the recording will be on YouTube later. So thank you for that. Adinda, thank you very much. Have a wonderful morning, afternoon, evening, wherever you are in the world. And I will see you next week. Thank you, guys. Take care. Bye-bye.